Hey there, traders. It's Wednesday, April 16, 2025. We're looking at a daily chart of the SPY. This is today, and we talked about them coming down, and they did. So in the pre-market, I felt like things were kind of on edge, and that's what I shared in the game plan, which we'll look at shortly. Just did not feel comfortable trading. The likelihood was still high that volatility could be increased, and it just makes the levels harder to trade in general. But we're going to look at everything shortly. Here's where we are in the middle of the week. They fell away. The trend line is not on this chart, but we will look at it shortly when we go to the entire day on the 1 minute chart. But that's what they've been fighting, and they pulled away. So it's not a huge surprise that price fell today. And I made the decision early on to just not get involved in the market. It just wasn't worth it to me. Although the levels that were hit were respected in a general sense, like big picture stuff. And that's the thing. When price is moving around a lot, it's a little harder to trade the levels unless you're willing to give them more room. That being said, here are the levels that were put out this morning before the opening bell, and here is the game plan. And it's probably worth reading through this. Some important things here. I mentioned that something just kind of felt like it was on edge. Price was just acting a little different, and reminded everybody about the possibility of price pulling back. Did not want to have levels below current price. Where price was at this time, there was only a level or two below it. But I was good with that because if price dropped, where did I say that? If the bottom drops out and price falls, I would just leave that alone, let price fall. Conflicting signals. I said the levels should be important and provide reactions in a normal market, but the chances are still high that we're not in a normal market yet. And I said I wasn't going to trade. The big takeaway in my mind is price had to get above that trend line for the bulls to be in charge. But if price stayed below that trend line, the chances just keep increasing that price is going to fall and the bears will be in control. That's pretty much what happened today. So here are all the levels, including the trend line. That's the lighter blue down sloping line. And you can see how far below they were. And I've taken the liberty to go ahead and adjust the levels that price hit. I've included the 5-cent buffer as price came into it, and you would know what that means if you've taken the course. And I've mentioned it plenty of times in these recap videos. You see the profit objective and the fumble threshold. That is the green and the red line flanking each of the levels that price hit. I just want to impress upon you that the levels themselves were important in a bigger picture. In other words, you can see what price did. They came up early, hit this level, reacted, came down. This whole area was support. It went back up. This whole area was resistance again. Spent a lot of time, not too surprising. When they got underneath it, they fell. I'll talk about that in a minute. And when they got down to this bottom level, this whole general area was support as well. But if you were playing by the rules and you're only looking for 4 points or 40 cents in the SPY, then what would you have done? You would have gone long at 531.23, and no rules would have been violated when they got out of the money down here. Once again, this is the idea of giving the market just more room to work. So it's not too surprising that these levels are spiked a lot. They came up within 10 cents of the profit objective. You can see the high here at 10.09. The high was 531.56. They come up close to your profit objective of 40 cents, and they're quickly back to the entry point and hovering around that. That's a clue you probably want to jump out at a wash. That's how we're going to code this thing. Although you can see that the whole area was support in the long term. I'm not suggesting you would have stayed in this trade long enough to get a long trade. And therein lies the conundrum when you have an atypical market trading these levels. Then they get up to 533.33. They bounce off of the 40 cent profit objective a few times. And the fact that they spent some time up here already, early, it's not a huge surprise that they spiked through the level. It went up. And here's the thing about this level. If you went short here at 11:23 a.m. Eastern, they got out of the money. And if you've taken the course, you know what I'm talking about here. They got out of the money, and you would have had a clue when they were just on their way down. And if you reversed there, you would have given some money back and been on the wrong side as they continued to fall. And that's ignoring the big picture, ignoring that game plan, that there was something going on, that the bears had the chance to push price down. I mean, they're already under this trend line, and they could not make this level at 535.56. They came up short. So things were kind of looking weak at that point. But I'm going to go ahead and be fair and say that if you went short here, you would have reversed at the exact wrong time by ignoring the signals, and you would have incurred a max loss limit eventually as price continued to fall. And to add insult to injury, when they came down into 531.23 again, since you traded this level for a long trade over here, you wouldn't have done it here again per the rules. However, this time it worked perfectly. So a wash here, giving some points back to the market here, ignoring this. And then when they fell, by the way, let's just put a line here and show you that once they broke below this, let's just put a different color here. Once they broke below the low where they made earlier in the day, down here somewhere, I was actually tempted. So I said I wasn't going to take any trades. I didn't. I'll show you the recording should be playing here of the entire day. I've just sped it up quite a lot. So I didn't take any trades, but at this point in the day, I was kind of tempted. I saw what they were doing. When they got under this level, closed a few candles under it, somewhere in this neighborhood, I was seriously thinking about just jumping on board and going short. Probably wouldn't have been very nice to pull 20 points or so out of this thing when some of you may have traded this and lost some money. But I did not mess with the market at all today, as you can see in the recording. Anyway, they're coming down into 522.73. And if you did choose to take that trade, the timing was okay. It was right at 3 o'clock. This doesn't look like much right here, but it's a perfect bounce. They came down low of 522.71, triggered your E-mini trade, bounce up 4 points, and then continue lower. But the big picture is this whole area is support, like I've already talked about. But that's one base hit. So it really wouldn't have been a good day if you were just blind to the big picture and being very rigid with the rules. But just go back and look at the game plan. You can see that my general sentiment was being short was probably the best place to be, and the even more conservative approach was to not get involved in the market at all. But we'll just go with it. We're going to say that this was a bad trade, and you got one base hit. And that makes the tracking log look like this. You can read the notes. Level 2 was the wash, went up to level 3. There's your max loss limit that was hit on that reversal, and then it went all the way down to the next level, the lowest level. That would have been a base hit if you chose to trade. So this is what the profit and loss look like. And then over on Sam's Trades, no trades taken, which was the safe thing to do. Not sure if this recap helped, but we're just taking what the market gives us. When the market is not normal, and I'll put that in air quotes, then you have to pivot and just make decisions accordingly. If you saw a few things happen today, like in real time, price action in real time, that kind of gave you the feeling that maybe you should be on the short side, it's probably good just to trust that gut feeling. That was the feeling that I had before the market even opened, based on what the pre-market was doing. And they're definitely under that trend line still. So we'll see what happens tomorrow morning. As you know, there will be new levels, a new game plan, and my opinion of the general sentiment of the market at some point before the market opens, and I will share that information to those of you on my list. So thanks again for watching. I will talk to you tomorrow in the next recap. Have a great day.